welcome everyone. I'm going to go ahead and offer you a brief introduction, then we'll be ready to roll here. So thank you everyone for joining us this afternoon. I'm delighted to welcome our next presenter to the stage. Mike McGlone is a senior commodity strategist for Bloomberg Intelligence, a unique research platform that provides context on industries, companies, and government policy, available on the Bloomberg Professional Service at BI. Mr. McGlone specializes in the broad investable commodity and crypto markets, authoring the monthly Bloomberg Commodity Outlook and Bloomberg Crypto Outlook. He is a CFA charter holder and has earned a Financial Risk Manager FRM designation. Mike, it's a pleasure to welcome you to the stage. Ready when you are.
Hello, Jordan. Thank you for having me. I'm honored to be presenting with the Money Show, and pleasure to meet you, particularly on one of my favorite subjects. What I do here at BI is every day I come in, I'm always looking for content, and I publish on the terminal. And what we do now, we're doing right now, is basically the show and tell part that I just love. I can finally say, this is all the cool stuff I've been working on, and to be able to talk about it. So I'm hoping to maybe we get some conversations out of it. And this is the dashboard I write to. Everything I publish comes out on the terminal. Now, obviously, most people in this venue will not see it, but when I do publish, I always like to start kind of the mantra we have here is facts first and then explain. And when I present on cryptos, I like to start with this first question that Guy Johnson, one of our anchors in London, asked me. It was in November 2020, live TV. And I was really bullish. I'm like, Bitcoin's going to break out higher. Just you could see it happening. And he goes, well, what problem does this solve? Typically the way I was when I first heard about it, silly internet money. And I like to start here with the Hoxne Hoard, start with the British Museum, a place I haven't been to in a couple of years. I can't wait to go. But I just love the story of this largest hoard of Roman era precious metals ever discovered in England. This was in 1992, found a box, a decayed box, and what was left was precious metal. So your typical, it was probably a Roman leader who had to flee the country as the empire was collapsing. And I can just picture on a moonlit night him burying his treasure. Can't have a servant do it because you have to kill the servant. Can't have anybody else do it. You got to do it and hide it. And of course, he never came back. But what does Bitcoin solve? And this is on the most words you're going to see in my presentation. Bitcoin appears on track to become a globally accepted, decentralized reserve store value asset that's easily transportable and transactable, has 24/7 price discovery, is relatively scarce, and is no one's liability project. Now that sounds like a lot. It is, but that's what's happening. In this world going digital, Bitcoin is a global digital reserve asset. And one of the things that we do in BI, we write for professional investors, institutional investors all around the world, and it's facts first and then explain. So this is what I published today. So typically when I give presentations on the subject, I'll rehash old ones, update them and stuff. And this is my headline today: what ends the Bitcoin Ethereum range trade? Bullish fundamentals. So I look at it as an ex-trader, used to be in the trading pits in Chicago, and delighted not to be trading anymore. And what's happening, and this is a chart of Bitcoin, and basically twice in the last year, you've been able to buy around 30,000 and sell around 60,000. Double your money twice. Or short around 60,000 and buy around 30,000. That's what people do. Most notably in cryptos, they're the most widely traded machines on the planet. I mean, some of them are just for trading machines, and I'll get into that. A lot of speculative access in the space, clearly, but I do think the key winners will be Bitcoin, Ethereum, and crypto dollars. We'll get into that. So Ethereum's doing similar as Bitcoin. Its range has been between 2,000 and 4,000. Since early last year, the significant difference is Bitcoin began 2021 around 30,000. Ethereum began 2021 around 700, and it's been holding support around 2,000. So yeah, maybe it gets below there. Maybe it flushes out stops and gets rid of some of those leverage longs. I mean, there's tons of them in the space, but the big picture is this is a revolutionary technology and asset, and this is just part of it, speculation. The way I see it is, I'll dig into a little bit, I'm starting with the technicals because the fundamentals are really what matter. And the bottom line, when you look at this from a commodity standpoint, which is I'm a commodity strategist, is this is something I've never seen in any commodity almost any asset, is declining supply. Increasing adoption, I can point out a little bit. This is what I'm showing you on this chart, is the declining supply of Bitcoin by code, there will only be 900 Bitcoins mined per day on a global basis. That's it until 2024, and then it goes to 450. So 2025, by 2025, the increasing supply, which is declining, incremental declining, will drop below 1%. This year was the first year it went below 2%. Why is 2% significant? Because historically, that's the long-term increase in the supply of gold. The way I look at Bitcoin, since I've been really tracking it and watching it, which has been almost 10 years now, is it is a digital version of gold. Digital gold was one of the first books I read on Bitcoin by Nathaniel Popper. But what I show you here is the significance of these assets. It's a bottom line in terms of economics. If you see declining supply, increasing demand and adoption, prices must go higher over time. What ends that is the way I look at it. That's just a fact of what's happening. So I showed you earlier an initial chart. That's what's happening. Technically, the big picture is quite positive. This to me is an annual chart of Bitcoin. I've showed this on every presentation I've given for about 2 years given. And again, what I show you in white is the supply of Bitcoin by code will continue to decline for about 100 years, but it declines on a slower pace, below 100% in a couple of years. And then I showed you the annual pace. Last year was kind of a disappointing year for the year after a halving when you cut supply. And this year we're kind of hovering a little bit down in the year. What are we down at the moment? About 20%. In Bitcoin terms, that doesn't matter so much. Bitcoin's corrected 50% twice in the past year, which is great for traders because traders love this space. I mean, it's just inundated with traders. So what do traders do? They provide liquidity, also sometimes extremes on the wings. I like to show these two charts juxtaposed. So here's Bitcoin supply. Here's the supply of the broad market. Bitcoin supply heading lower. Supply of cryptocurrencies in the broad market. So I'm sorry for flipping back and forth, but we need to accentuate, really extol what the difference is. Bitcoin supply is declining. And when I show you here, there's about 17,000 cryptocurrencies now. A year ago, there was half that. A year before that, it was half that. There is not, the rule of economics does not favor the broad crypto market. Unlimited supply, ease of entry. It's just simple. I mean, massive speculation. The broad market's got a problem. And that's what I look at when I point out, I focus on the main cryptos that matter. So plenty of supply is a broad crypto market headwind. So what I show you is just that increasing supply. But what I show you overlaid is Ethereum divided by a broad index. Why? Because a lot of the cryptos in this space are based on Ethereum tokens. They're on Ethereum platforms. So I look at it this way. Okay, well, that means demand for Ethereum. That's pretty significant. Yes, there's competitors to Ethereum, but once you establish this space, you're good. So that's part of the reason I'm digging into Ethereum a little bit. I'll focus mostly on Bitcoin, but there's part of the reason to think bullish and Ethereum. It's part of that infrastructure to space, and more cryptos in the space, seen in space. It's bad for them because there's so many, and everyone's better than the other one. But it's good for Ethereum because most of them are based on Ethereum tokens. And this is one chart I really showed recently is when you look at this crypto supply, you just take that supply there and take the Bitcoin price and divide it by supply. And that's what you see in my white line there. It's just the price of Bitcoin divided by the number of cryptocurrencies in the market. Right now, it's about 17,000. Like I said, a year ago, it was about half that. And that's what you see on this chart. If you can see my pointer, I don't know if you can. I guess you probably can. Maybe you can. It's back to near support level, i.e., Bitcoin has limited supply. It's the benchmark. It's the one. It's becoming global digital collateral. And then there's the gaggle. Versus that gaggle, it's back to support level. And I also like to point on this chart the chart of the MVIS crypto compared digital assets small cap index. Yeah, it got high this year, but it didn't get anywhere near the high in 2018. Remember, what's the problem with the unlimited supply and ease of entry? Yeah, massive speculation got this rally going, but it ain't good for overall prices. And this is a key thing I want to focus on in this space, and as I do, is these three musketeers of cryptos are crypto dollars. Some people call them stable coins, Bitcoin and Ethereum. This is a firming digital foundation. This is what I've been focusing on mostly from an institutional standpoint. So I just show you here a snapshot from coinmarketcap.com. They sort the cryptos by market cap. And what's notable is 2 of the top 5 are what people call stable coins. I'm like, well, if they track the dollar, let's call them what they are. Crypto dollars, Tether and US dollar coin. Now I can get in that a little bit, but the bottom line is, yes, Tether's controversial, but it's it's just the predominant, and there's a dozen wannabe crypto dollars. The most significant trend in this space, I have to point out, is the proliferation of crypto dollars. See that volume on Tether? It's double that of Bitcoin. The most widely traded crypto assets are dollars. It's the dollar. So when people say Bitcoin is going to supplant the dollar, nope, it's the opposite. Crypto dollars are crushing it. So I want to show you part of the reason I only focus on, I have been only focused on the top three: Bitcoin, Ethereum, and crypto dollars. Again, some people call them stable coins. I say let's call them what they are. They all track the dollar. They're crypto dollars. So what's consistent in this space is change among the top two. So here's a shot from January 2021. This one is current, right? Top five. We got Bitcoin, Ethereum, Binance Coin. Binance Coin makes sense. It's part of the exchange, the world's largest exchange. And then crypto dollars. A year ago at this time, what were the top five? Bitcoin, Ethereum, Tether, Litecoin, and XRP. Litecoin and XRP have been pushed to the wayside. Why? There's massive speculation. That's great. It's just a cautionary tale for every time I see them pop up to the top 10, I hear how great they are. I have to admit, having been in markets a lot and having been a major speculator, as you can see by my hair, you learn that lesson. So let's look at this same chart from 2019. What's among the top five? Bitcoin, Ethereum, XRP, Bitcoin Cash, and EOS. I just remember how great EOS was. It's the Ethereum killer. So I'm just kind of become immune to these things, and how of the 17,000 wannabes out there, you have to be very careful what are pumps and become dumps. And last year we had a lot of pumps in the Doge coins, the dog coins particularly, that were just purely speculative. Be careful, but they did give us some good indication. When Doge coins peaked in April and when Shiba Inu peaked in October, they were good signs of the whole market peaking, because it was just massively speculatively focused on excessive positions. So I need to focus on we should focus on what's most predominant in this space. Most people say Bitcoin and Ethereum. No, the top trading digital assets are crypto dollars. So here I show the market cap of crypto dollars. This is only the top five that are listed on coinmarketcap.com. It's approaching 170,000. If you list the rest of them, it's closer to billion dollars, $170 billion. What's the clear trend here? Clearly from the lower left to upper right, and it's one of the most enduring trends I've seen in cryptos. I remember being in Hong Kong in 2018 during crypto winter, right before the typhoon, right after the typhoon and right before the protests, and pointing out that everything was going down except one thing: the market cap of crypto dollars. At the time, it was only Tether. But what's the key thing about these crypto dollars? Almost all of them are denominated, or not denominated, but utilize Ethereum tokens. What does that mean for Ethereum? Demand. NFTs, you all have heard of NFTs. Almost all of them are denominated in Ethereum. That's part of Ethereum building that building block. So that's a bit of the difference. The key significant thing I think about 2022, 2021 was what happened with China banning Bitcoin and banning cryptos. To me, that is probably will go down in history, one of the major mistakes of the Chinese Communist Party. It's like banning the internet when it's first brought out, banning airplanes when they first invented. And I think it's going to potentially signal a downfall of the Chinese Communist Party and China. But you had this major correction in the hash rate, which as I show you here, I got this hash rate from Coinmetrics. I think I use a 10-day average. Hash rate plunged 50% or so. Now it's actually, I think, about 30%, biggest plunge ever. Market plunged, and what it did, came back completely organic. What happened with that transition to me was just shocking. Virtually all the miners completely organically migrated, mostly to North America, where the rule of law pervades, where they can tap into good, solid energy at a good cost. And what happened too, also, some of these miners are now public traded. They're easily accessed by investors. And when investors buy into, oftentimes the miners are pointing out they don't just sell the Bitcoin, they hold it. So it's a good way to get to Bitcoin. So it created demand, and it happened organically. There was nothing that forced that to happen. There was no person making the decision. It's just that the strength of this global largest decentralized network I've ever seen. So from a guy who used to trade in trading pits with futures, and there's no limits and there's no shuts and pit never closes, it was just so impressive to see that. The key thing to remember, I think, point out what's happening this year is the Fed put may have expired. To me, and being having worked in primary dealers since the 80s, but I do think Bitcoin is going to come out better for it. So remember, when the Fed is tightening, the Fed is taking away the punch bowl. The rule you should be don't fight the Fed. And all risk assets are at risk, and cryptos are the riskiest of assets. And I think a primary target is commodities and the stock market. If they go down, it makes the Fed's job easier. So the key thing to think about in terms of cryptos is Bitcoin is the least risky crypto, and I think it's going to come out ahead. But the key trend I want to point out is I think this is going to be the year where Bitcoin comes out ahead versus equities, i.e. what's happening. Bitcoin is just a small fraction of our portfolios. Virtually all managers know they have to get off zero. And supply is declining, adoption is increasing. What does that mean for price? Where is that 10 years from now, 20 years from now? The key thing I want to point out in this chart is what I show you is Bitcoin volatility, annualized volatility versus the NASDAQ. It's clearly declining. It's only about 3 to 4 times. It was 10 times before. And what's the price doing versus NASDAQ? It's increasing. I remember it was stuck at 1-to-1 forever. In 2020, it broke out. I've been bullish since on it. It's the similar chart in Bitcoin versus gold. Volatility says Bitcoin's in path to 100x versus gold. It was stuck around 1x, and then it got to 10x, and now it's breaking out towards I think 100x. And what's a clear sign? Bitcoin volatility is clearly declining versus gold. It should. I mean, it's a nascent asset technology, and it's maturing in the space. Key thing also, Bitcoin volatility is declining versus crude oil. Here's the big difference I look at as a commodity strategist. It's the higher price cure. Crude oil prices go higher like they are now, supply will come on. And why you have to ask yourself, is crude oil about a third of the price from the peak in 2008? Because of supply. If prices go up, supply will come back on, elasticity apply. Bitcoin and Ethereum don't have that. And that's what I show you in this chart. I show you, this is just the price of Bitcoin in white divided by crude oil. And overlay, I show North American crude oil and liquid fuel consumption. Massive surplus this year. It's going to be about 15%. That's in barrels. So it's approaching 4 million barrels a day. That's north. I have to include Canada because Canada is a major exporter and producer of all commodities.
Hey, Mike.
Yes, go ahead.
I just want to give you about a 5-minute warning until we're about at 1:20. We've got a ton of questions, so I didn't know if you want to reserve maybe 8 to 10 minutes to answer them, or if you wanted to spend less time. But I just want to let you know we're about 15 minutes into the session. So up to you if you want to go another 5 and then open it up for Q&A.
We'll do that. So I think Bitcoin is gaining the upper hand versus stocks. And here I show the S&P 500 versus the 60-month average, peaking from the highest in 20 years, and the Fed tightening, or at least planning on tightening. To me, Bitcoin is doing to gold what gold did to silver. Silver used to be considered synonymous with currency. That's what I show you in this chart. The gold versus silver chart has been rising almost forever, stalled lately, and that's just the Bitcoin chart versus Bitcoin versus gold. To me, it's clearly happening. This is a macro chart I've been showing for a while. I just wanted to rehash it. One thing that Bitcoin has shows a strong tendency to is a rise with money supply, and we all know what money supply did since 2020. And again, supply is collapsing. This is more just a headline index. I want to get in some other charts I want to focus on a little more, and then we'll pause for some questions. And I look at Bitcoin as, from an investor standpoint, why take the risk of not allocating some? To me, it's akin to fading the internet. This is what I show you in performance. In white, you see gold holdings are declining. So there's clearly outflows in gold, inflows in Bitcoin. And I just show you the Bloomberg Galaxy Crypto Index performance since start of 2020 versus gold, spot gold. It's basically nothing compared to what's happening. But this is a key theme I want to point out. Got a few more charts, and then let's do some Q&A. The way I look at market is Ethereum is to fintech and digitalization what Bitcoin is to gold. So Bitcoin, it's a fact, is replacing gold in portfolios. The question is, extrapolate that in the future. I expect it's going to accelerate. Ethereum is the building block for NFTs, crypto dollars. It's basically the foundation for financial technology and things like this. And here's one key chart I want to show you. Ethereum, done it before, but demand's increasing, supply is declining, prices go up. So here we saw supply is declining. Now there's more reasons. It's less defined Bitcoin supply, but the protocol changed last year. They did to burn coins. I was shocked by how they did it as a commodity guy. I'm like, supplies, the decline in supply is accelerating downward. And I'll end with this, and we can go some Q&A. The way I look at it is, this is a chart of the U.S. Fed trade-weighted broad dollar going back almost 50 years. I look at when people get bearish the dollar, I'm like, what does that chart say? It's been going up forever. Why? Because the dollar is measured against other currencies. And I like to look at the dollar as what Churchill says about democracy. It's the least worst. It's the worst form of government except for all the others. The dollar is the same way. When you measure it against another currency, give me a better one over time. Okay, maybe yen and Swiss in the short term, but those countries can be invaded with a heartbeat. And do they have the robust system the U has? Stock market, bonds, everything. So to me, don't worry about the dollar versus other currencies. It's going to be doing fine. Cryptos are a good indication of that. And then let's also look at Bitcoin. Bitcoin's starting to move forward and accelerate, become part of that space. With that, Jordan, why don't we do some Q&A, and related to the Qs, I can show some potential charts.
Excellent. All right. Can you hear me okay?
I hear you great.
Excellent. Okay. Let's go to our first question. Will the volatility of Bitcoin be reduced when institutional investors adopt Bitcoin more than they are doing today?
Absolutely. The volatility of Bitcoin will decline regardless, partly because it's a maturing asset. Remember, it's just invented. It's only been around a short period of time. And that's what I show you here. So right now, Bitcoin volatility is about 3 to 4 times that of the NASDAQ. I was shocked in 2020 when Bitcoin volatility continued to decline and assets, virtually every asset on the planet increased volatility. So yes, it's a guarantee. The more participation, Bitcoin volatility will decline, and I fully expect it to. Right now, it's about the same as where Amazon was when it first, about 20 years ago, and where gold was in 1980. And it's just by the pure, just look at the chart, the pure regression analysis of Bitcoin volatility. It's probably going to be about where gold is in about 5 years. That's just based on a regression analysis.
Fantastic. Our next question is, in your opinion, or do you have any opinion on whether the SEC will approve one or more Bitcoin ETFs this year?
I don't know about this year, but it's a matter of time. The thing that's happening with Bitcoin and ETFs is the SEC says they are out to protect investors, but they've approved a horrible product. I mean, it's a horrible product, but it's guaranteed to lose, have a underperform actual Bitcoin, versus Canada and Europe are approving them. So my goal with when we launched the Bloomberg Galaxy Crypto Index was to have a widely disseminated ETF track and index. To me, that's the best way that the SEC can help investors. Don't pick winners. Let the market do that. Just let them get exposed. And to me, the market's going there. But the fact that money is now flowing out of the US to Canada, i.e. ARC, Fidelity just launched an ETF in Canada, and to Europe, is a clear indication that SEC is under pressure. They're dragging their feet, taking them a long time, but I must give them some credit. They did launch a Bitcoin ETF last year, and to me, it's a matter of time they do it on Ethereum. That might take a little while just because futures volume, it'll be based on futures. But the end game to me is have the SEC approve an ETF that tracks a Bitcoin crypto index, just like the S&P 500 and all the indexes, ETFs we have there. And if they're truly trying to help protect investors, it's about time. So they'll get there. Remember, this is a major turning ship. Have to admit that Mr. Gensler did approve the Bitcoin ETF, BITO, and some other ones. So it's a matter of time. Sooner the better. But right now, you could claim that they have some blood on their hands, because investors have had to go to GBTC and have had to pay a premium because there was no other place to go. And now it's a severe discount. So you could say, have they helped investors or have they hurt investors in Bitcoin? So this is part of a nascent technology. They're catching up, and it's part of the going down the rabbit hole, which regulators and legislators are. And the fact that China has banned it means it's much more likely the Western world, most notably the US, is going to embrace cryptos, most notably because what are they doing with crypto dollars? The most widely traded assets.
Excellent. Our next question is a bit longer, so bear with me for a second. Which one is a better investment, gold versus crypto? It depends on your risk tolerance, investing goals, strategies, and how much capital you can handle losing. In your opinion, what's your view on crypto backed up by precious metals, safe or not?
Crypto backed by precious metals. That's a little more complicated than I'd fair to get into. The way I look at Well,
let's
no,
go to the,
but I have an answer for that one. I think is because he's kind of trying to answer it himself. The way I look at gold is it's no longer appropriate to hold gold if you're a good fiduciary and good manager without Bitcoin in that bucket, because it's clearly being replaced. That's a fact. So you should have some Bitcoin in that bucket. And the way I look at it is what's the greater upside is much more upside in Bitcoin. I'm bullish both. I fully expect gold to break out higher, but I think, again, gold is naked without Bitcoin, and Bitcoin has been actually, let's end with this. Ask a typical millennial when they think about gold and Bitcoin, they don't care about gold. They're buying Bitcoin. And where are they next 5, 10 years? They're the boomers of today.
excellent. Our next question is, do you think as Bitcoin continues to grow in a decentralized environment, that governments will eventually step in to regulate and centralize them out centralize them out of existence and replace them with government regulated digital currencies?
Nope, not at all. So here's a fact of what's happening. You can't do much about Bitcoin. It's open source software protected by free rights. Unless you shut down the internet, it's fine. And then what else do we have? We have crypto dollars. The government is going to regulate crypto dollars. It's a matter of time. But they're proliferating. They're a better way to do business. You can transact 24/7, instant settlement, it costs you nothing, and you earn interest. So that is where I think the government's going to focus on. The US, the fact that China has banned Bitcoin and cryptos means the US is going to embrace it, partly because I think China just threw themselves on the mat in a wrestling analogy, and it's just up to the U.S. to take advantage of that. So I don't think the U.S. is dumb enough to mess with this revolutionary technology. And that's the cool thing about competing states. They get it. And I'm in Miami for a reason. I moved to New York. The bit license is hurting New York, and it's hurting profits. But the bottom line is this is a revolutionary technology, and rapidly advancing tolerant countries like this, U.S., Canada, Europe, are embracing it and get it. It's just not perfect. They're coming along. And the fact that China banned it means that all the more likely the US is going to embrace it with proper regulation. Crypto dollars right here, I show you in the top, are next.
Excellent. Our next question is, how safe, in your opinion, how safe from hackers, ransomware are the crypto brokers like Coinbase, Binance, and Voyager?
No comment.
Okay. Our next question is, what is your opinion on the GTBC discount to FMV?
So the GBTC discount, which is close to 20%, I think is a matter of time that will go away. But there is a problem with it could get more extreme. Who knows? But I view, I can't give investment advice, but I have to point out you can buy GBTC now and get Bitcoin at 80 cents on the dollar or 75 cents on the dollar. And if you're in it for the long term, at some point that's probably going to go away, and you'll do okay. Plus, it's easy access. Now the problem is people who've been invested and bought at a premium, who could not buy any other, could not get to regular Bitcoin, should have an axe to grind with the SEC. I think it's a matter of time. Bitcoin, GBTC becomes an ETF, as they said they would. Right now, it's a trust at a discount. So, but it's the biggest one in the space, and to me, that's a matter of time. But there's risks and reward. But right now, you can't easily buy Bitcoin at a discount, and make sure you have a long time frame. I say minimum 5 years.
Excellent. Do you have an opinion on futures ETFs versus spot?
Oh yeah, it's just a matter of time. Well, futures ETFs are great for trading. I wouldn't suggest them for buy and hold. I mean, people can buy and hold Bitcoin and cryptos and earn interest in a lot of these crypto savings places, and just do the actual physical. But to me, it's a matter of time. There will be a physically backed ETF in the US. And like I said, the goal should be an ETF that tracks a broad index of physically backed cryptos, or an index that tracks a physically backed index. And right now, at least it's the baby step the government's taking. Remember, this is the old guard. There's massive lobbyists, and the banks are being pushed aside, and it's just going to take some time. But the fact is, we're going the right way. And the bottom line to remember is, it's a pushback on China, and China's completely banned them, which we're going to embrace. It's just the baby steps. It's going to take some time.
Okay, and we got time for one last question here. Will Ethereum be replaced by a faster platform like Solana?
The problem with Solana, as I showed in some of these, is it's got pumped so fast. It's not even the top 5 anymore. It's not even. I think it's actually below top 10. And I hear how great it is, but it keeps crashing. And it was a massive speculative pump. I keep trying to dig in to do the supply demand analysis on it. I have not been able to narrow it down yet, but I'll give it a little more time. Like I said, Solana's been great, right? But I remember how when EOS was the Ethereum killer. So I'm very cautious about all the up and coming things that rally to 10 to 20,000% in 1 year, and stick with the main ones. But that's where an index, a properly managed index, will capture the winners, will have a survivor bias, and push out the losers. And that's where I really bias towards things like the Bloomberg Galaxy Crypto Index, and for investors to get exposure through an ETF that tracks an index. And I think the SEC will come around and realize, okay, we want to protect investors. That's what we should do. We should approve an ETF that tracks the broad index, and we don't have to worry about picking winners, which is kind of dicey if you have 17,000 wannabes, and it's just like picking winners in the stock market. Indexing is the way to go.
Fantastic. Fantastic presentation, Mike. We really appreciate your time. Is there a good way for people to reach out to you if they want to continue to follow your work? I know you mentioned the newsletter. Is there any other way for them to follow you?
I'm on LinkedIn. You can find me, Mike McGlone Bloomberg. I'm on Twitter. I respond to LinkedIn a lot more. I'm happy to link with anybody, and if you can ask to put me on my distribution list. I'll do that. And I'm on Twitter. I just don't respond as much. Mike McGlone at Mike McGlone 11 on Twitter. I'm sure you can just do a search and find me.
Fantastic, Mike. Thank you so much for a wonderful presentation. This was very timely for our audience. We look forward to having you back at the next Money Show.
Great. I'm looking forward to, Jordan. Thank you. And happy Friday Eve to everyone. Wishing you a good weekend.
Thanks so much, Mike. Be well.
Cheers.